Hey everyone, welcome back. My name is Zane and today we're looking at dYdX. dYdX is a decentralized borrowing and lending platform that is based on Ethereum. It offers borrowing, lending, and betting tools for crypto users. Now before we go further, I must explain to you that this video is not financial advice. This video is strictly for educational purposes and for entertainment. Today I'll explain to you as much as I can about dYdX and I'll try to explain it to you so you understand what it is. We'll also go for a price analysis, technical price analysis, and a price prediction as well. So what else is there to understand about dYdX? Well, it's a decentralized margin trading platform that is based on Ethereum. Now dYdX allows users to borrow, lend, and make bets on the future price of popular cryptocurrencies. It also wants to bring trading tools normally found in a fiat market to the world of crypto. Now, in some ways, you might think that dYdX looks like another lending protocol in Ethereum. But if you look a bit deeper, you'll find that the protocol is trying to take decentralized finance to the next level. But first, we have to look at the big problem that faces us in the crypto market, our common tool for traditional traders and investors. But in crypto, these features were limited to central exchanges such as Kraken, Huobi, and Binance. These standard trading features are being built in a trustless and decentralized way. So what exactly is dYdX? Well, we know so far that it's decentralized borrowing and lending, and that's mostly exists in the DeFi world through popular platforms such as MakerDAO. But dYdX is focused on building more advanced trading tools on the Ethereum blockchain. Like with other DeFi products, the dYdX protocol is available for anyone use and built upon with users' assets managed by smart contracts instead of people. It is the most popular decentralized margin trading platform with a peak of over 140,000 Ethereum worth 30 million at the time, locked up in smart contracts in November 2019. Now as of April 2020, more than 500 million has been traded on the platform. Margin trading is essentially borrowing money to make bigger bets. Crypto traders make bets that the price of crypto assets will move in a way that predict either up or down. Margin trading allows them to increase their profits if they're right, but also their potential losses if they're wrong. The more leverage used, the more risk or reward of a gain or losses. For example, using 2x leverage essentially doubles a trader's potential gain or loss. Because identity solutions and reliable credit checks are not widely available on the blockchain, almost all decentralized borrowing uses collateral. Collateral is the minimum deposit needed to take out and repay a loan. The more collateral you put down, the more you can borrow. The protocol was founded in 2017 by Antonio Giuliano, an ex-Coinbase and Uber engineer. So as of 2019, dYdX users can trade between Ethereum, DAI, and USDC with up to 5x leverage. Centralized exchanges such as BitMEX offers up to 100x leverage for margin traders, meaning that a tiny movement of the price in the wrong direction will get you liquidated. Compound, Atom, these are all cryptocurrencies that are live on the dYdX platform. It's a really big deal for dYdX. Cardano is also live on dYdX, and this was live on July the 6th. Avalanche, Dogecoin, they've got some big name. Yearn, 1inch, Solana, SushiSwap, Uniswap, AV, they've got plenty on their platform. And this is the reason why I'm not surprised why the crypto itself is so valuable, because the platform clearly has a lot of potential. Now the reason I'd like to have a look at Avalanche being added to dYdX, this was late. This is old news because this happened in April this year, so it's kind of old news, but it's still important. Especially given how well Solana is doing right now, it is still important. This was a really big crypto to be added to dYdX. This is a big deal because of how well Solana has been doing, especially lately. Without a doubt, that's definitely paid off. And over time, they're just going to add more cryptos to their ecosystem and their platform. On the 13th of September, it's actually at $9.65. So this was So this was really significant. It went on a huge price rally to achieve $21. But before that, on the 18th of September, it achieved a price of $17.90. And the 25th of September, the price actually fell. It actually went on a huge pullback. The price actually fell down to around $11. That was a huge and significant hit. That's a huge pullback. From the start, from the initial coin offering, I can honestly say that this crypto has a lot of growth. It has a really strong growth. And right now it's doing exceptionally well, because when the entire crypto market is going down in value, dYdX is actually going up in value. Since the 25th of September to where we are right now, it's been going up. It's on a huge price rally once again. So I don't even think this was a pullback. This was more of a correction in the price. And the consistency of the crypto, the fact that there was a huge volume in this crypto, meant that it wasn't a matter of if or not. It was a matter of when, and it's achieved $20. So I was quite impressive, and it accomplished this quite easily. Now, I definitely think $30 is definitely on the table before the end of the year. Between $30 and $40 is where I see this crypto sitting before the end of the year. Now, it's been around for a really short period of time, but throughout that short period of time, we've got some huge patterns in this market. A lot of swings, a lot of volatility. But there was 3 significant moments when the price rise was quite important to pay attention to. This was actually at the start, just a few days after it was launched. It actually achieved an all-time high of $16.30. This was quite impressive. This is the first indication of a pattern being formed. A second indication was between the 18th and the 16th of September. The price actually rose to $18 at this time, at a brand new all-time high. And these areas are all price discovery areas. And finally, where we are right now, the 27th and the 28th of September, the price has achieved $21, $22, and that's really... So those are 3 patterns that we've seen so far. Now we can have a look at the gaps between those patterns. Those are 3 major highs, but I only see 2 pitfalls, only 2 major pullbacks. This actually means that this red line is actually going to fall back down at some point, just like it did around this point, around the 12th, just like it did around the 23rd. And if I'm correct, the price, there should be a continuation, something similar to what I've drawn. Obviously, this could go a little bit different. It could stop where it is right now and immediately start going back down, or it could hover and keep on going up a little bit. Because we're tracking this red mark specifically, it can hover and keep on going a little bit and then fall back down at the start of October. Now, on the other hand, you've got an unlikely scenario where the price does rally but go a lot higher to $23. I would be really surprised if it hit $24. This is an additional scenario where if it did hit $23 after that, then it could take a major dip going into the start of October. Happen in between where the price is right now, and this dip could be an absolute landslide, bringing it back down to like $16, $15. And it's probably going to hover somewhere around $20, $21, and then going into the start of October, it's going to dip back down following this 3rd red line that I've drawn, and it's probably going to go back down to around $17, maybe $16 before it goes on another price rally to $30. So we are going to keep up to date with everything that's going on with this crypto, but this is just a prediction. This is just an analysis. This is the direction I think this coin could go in. Also, there is a bearish market that could be approaching. The market went for a crash like a week ago, so naturally a bearish market is on the horizon. And in many ways, there are evidence to support this, but at the same time, the market could turn around. But what's really happening in this bearish market is more of a correction with many crypto. And most corrections are all the same. They're there to make a correction in the price, which means that they're temporarily. And they're not going to take a huge dig into the price of the market. They take a little bit of profit and then they rise back up, which means that we take a little bit of loss. The price actually goes down. But if you never sell, technically, you never lose. But I definitely look forward to seeing where this crypto goes, because overall, it's been going up. Obviously, there have been highs, there have been pullbacks, there have been highs, there have been lows, but nevertheless, it keeps on growing in volume. The bigger the picture is, the more you'll understand how the picture was formed. But if you only look at a small area of the picture, you're not going to understand the rest of the picture. And it's the same thing to do with the crypto market. If you want to understand it, you have to look at the big picture and not just the small parts of what's going on. And I have to keep on reminding myself about this because this is how we make good price analysis. So thank you for watching. Subscribe. These are the patterns that I've recognized. And tell me, do you agree with the patterns that I've identified? And do you think that it could go into the direction I'm talking of? Into this third red line? That's the direction I think it could take heading into October. But when it does break out of this price, I'm expecting it to go to $24, $25. And I would not be surprised, because there will be a price breakout after the next dip in the market for this crypto. So thank you for watching. Subscribe, leave a like, leave a comment. Feel free to share this video on your social media accounts. Share this video with a friend or two if you think they'll enjoy it.